Welcome to the video newsletter for clients of Index Gurus Wealth Management. Hello, this is Farouk Jaffer, Certified Financial Planner Professional and Head of Index Gurus Wealth Management. As we walk into the new year, it's understandable if investors are peeking into 2023 with their hands over their eyes. With one of the most aggressive rate hiking cycles since the 1980s, the Fed has increased the risk of a recession and a decline in corporate earnings. Don't let the market volatility bring down your holiday cheer, because history shows the market eventually comes back. Investors have been through a lot in 2022, from inflationary data, Fed policy changes, China lockdowns, geopolitics, and recession fears. This has resulted in an unprecedented blow to the stock market. The Federal Reserve's ongoing commitment to raising interest rates to cool inflation is likely to lead to weak U.S. economic trends in early 2023, where the policy will have an effect on company earnings. There will be more choppiness, given that inflation is still a concern, but the longer-term U.S. economic outlook has improved. In the last major correction, Berkshire Hathaway CEO Warren Buffett told CNBC that he certainly won't be selling stocks during the decline in global stock prices, and that he would prefer it if Berkshire could buy at the resulting lower prices. Fed actions historically affect the economy with long and variable lags, so the economic consequences are yet to be fully felt, like the risk of a recession. That said, experts believe any recession could be relatively shallow in depth and duration. The key reason is that consumers account for nearly 70% of U.S. GDP, which remains in good shape without a heavy debt burden like in 2008. What if we enter a recession? It is possible that this may occur, but keep in mind that the average recession lasts 13.3 months, while the average expansion lasts 60.3 months. Based on the acceleration across goods and services inflation, we can see a huge improvement from the first half of this year. It looks like the Fed has had a positive impact on inflation. Big down days are tough, but staying invested is crucial. Since 1980, there have been 51 days during which the S&P 500 dropped more than 4% in a single session like it did recently, where 9 of those days happened during 2020. After each instance, the market never failed to recover and make new highs. Growth, driven by consumers and corporations, has held up admirably through the current headwinds. We believe long-term investors will be rewarded for enduring the volatility that will likely define markets over the remainder of the year. The next time market volatility feels scary enough to make you second-guess your long-term investment strategy, have a good think before you get out of the market. There could be a 70% chance you'll miss one of the best days. The chart below illustrates what has happened when an investor missed the 10 single best days in markets over the past 20 years. Megatrends are powerful, transformative forces that can change the trajectory of the global economy by shifting the priorities of societies, driving innovation, and redefining business models. They can have a meaningful impact on spending behavior, government policies, and corporate strategies. Identifying the potential for structural change and transformations early can be a key driver of successful investing. Technology breakthroughs like artificial intelligence, machine learning, and automation are unleashing a wave of disruptive threats across industries. Did you know that more than 75 billion internet-connected devices are expected by 2025? And that is up from 30 billion today. Climate change will cause us to have a greater dependency on clean energy like solar. Did you know that half of the world's energy is predicted to come from solar and wind by 2050? Certain commodities such as copper and lithium will likely see increased demand from the drive to net zero, and we are overweight the tech center and believe that it's well positioned for this green transition. Another major trend are longer lifespans and a larger demographic of retirees in their 60s. Did you know some estimates project a 45% increase worldwide in people aged 60 or older by 2030? With new technology comes the responsibility of privacy and cybersecurity. The Colonial Pipeline story is the perfect example. Did you know corporate spending on cybersecurity to counter online threats is rising quickly, up 12% from last year? Similar to the sentiment shared by Warren Buffett, Index Gurus advocates that our clients focus on quality-based factors such as balance sheet liquidity, positive earnings revisions, strong free cash flow, and lower volatility. Given our societal changes, it makes sense to tilt a diversified portfolio in various sectors. Why not just put it all in an IT or a QQQ? You'll notice that IT, the orange color, has held the top spots only in the past 4 years. Other top sectors include consumer discretionary in red and communication services light blue. This will change over time, so holding top companies in various sectors is important. It is so important to practice diversification, even though it sometimes feels painful and comes with FOMO, fear of missing out. Morningstar did a study comparing two portfolios over the past 20 years, comparing a growth portfolio to a diversified portfolio with 40% in income securities. As you can see, you would have actually come out ahead with a diversified portfolio. Focus on your goals and not the news. Index Gurus is going to make sure you are well positioned in great companies that will weather the coronavirus pandemic. With proper positioning and guidance, the chances that you will be in the green, in the positive after 1 year are 75% in your favor. The US has shown that they are willing to keep the economy humming, so it makes sense to stay invested. Thank you in advance for your trust. You can count on Index Gurus to help you reach your goals with financial peace of mind.